Hello and welcome to UAN Governmental Fund Accounting Course 102. In this video we're covering the budget basics in Chapter 2 of 4. Additional chapters in this series are Uniform Chart of Accounts, Cash Management, and Transactions. Let's begin. An operating budget is often in place when a new fiscal officer is sworn into office. They must learn how to operate within the budget and make modifications as required. This is often an uphill climb. The word budget is often used to refer to the financial plan for the upcoming year. However, once the new year begins, the two separate components of the plan are implemented and maintained separately. The two components of the current year operating budget are certified resources available and board-adopted appropriations. They are not the same thing. They serve different purposes, and they require different actions for changes to take place. So the first component of the operating budget is resources available. We'll start by exploring this component. In our family example in Course 101, the family had to start with their current cash balance and then estimate their annual revenue to arrive at the resources available. Our government example in 101 had to start with their carryover cash balance and estimate the annual revenue by fund to arrive at their resources available. The major difference between our family example and a government entity is the government entity must have formal certification of their estimated resources. Let's explore how that certification takes place. The certification of estimated resources is a cyclical process that begins with the filing of a tax budget for the upcoming year. There are a couple exceptions. If you're a library associated with a school library, your filing deadlines are in May, not July as you see on the screen. And there are some counties that no longer require the filing of a tax budget. They have slightly different procedures. So if your entity is in a county that doesn't file a tax budget, contact your county auditor to find out the procedures to getting your resources certified. So for those that do file a tax budget, the county auditor and budget commission certifies back to the fiscal officer the official certificate of estimated resources, known as the official certificate. The official certificate sets the limit by fund that the board may adopt for appropriations in the new year, and it's often used when planning temporary appropriations. The official certificate remains in effect until actual year cash balance adjustments and revenue estimates are certified to the county in January. We'll cover that form next. Then the county certifies back to the fiscal officer the amended official certificate of estimated resources, known as our amended certificate. The sole purpose of the official and amended certificate is to limit the amount of appropriations the board may adopt. All appropriation legislation is limited by the certificate in place when they're adopted. Let's take a look at the document used to certify new year figures to move from official to amended certificate resources. Here's a sample of the certificate of the total amount from all sources available for expenditures and balances. You may be able to see the sample in the book better than the sample on the screen. They're both identical. I'll explain each column. So the page you see on the screen or in the book is the first page of this document. On the first page, the funds are grouped and totaled by fund types as a complete picture. But the fiscal officer's work starts on page 2, where they list each fund individually under the correct fund type, and then the type is totaled and entered back on the first page to create the overall picture. All the pages have the same columns, so let's get a firm understanding of what each column represents. In column 1, the fiscal officer enters the cash balance of each fund as of December 31st. The area designated as 2 is made up of 4 columns. These columns represent various adjustments to the cash balance to arrive at the resources available for appropriations in the new year. Let's look at these columns. Column A, reserved for encumbrances as of 12/31. All purchase orders and unpaid employee share withholdings that were carried over to the new year for payment are entered in this column. These items were encumbered in the prior year, so they do not need to be appropriated in the new year. The carryover encumbrances reduce a fund's resources available in the new year. Column B, reserved for non-spendable balance as of 12/31. Only funds with a non-spendable balance will have an entry in this column. If it's not spendable, it's not available. So the non-spendable amounts reduce a fund's resources available. Column C is for reserve balance accounts. So if you have a reserve balance account established under the Ohio Revised Code, the amount is entered in this column. Reserve balance accounts reduce a fund's resources available. Column D is for advances not repaid. An advance is a loan of money between funds. Any fund that received an advance in a prior year but has not repaid that advance must have the amount of unpaid advance entered as a negative number, reducing its resources available. The fund that is to receive the repayment must have the amount that will be repaid entered as a positive amount, thus increasing its resources available. Column 3, carryover balances available for appropriation, takes the fund balance from column 1 and adjusts the balance by all the columns in 2A through 2D to arrive at the carryover balance available for the current year appropriations. Column 4 contains the title, Total Amount from All Sources Available for Expenditures. Simply put, this is the estimated annual revenue. So if the revenue estimates from the tax budget are still accurate, you enter them in this column. If the revenue estimates from the budget need to be changed, the new revenue estimates are entered and an explanation for the difference is included in your cover letter to the county auditor. Finally, column 5, the total amount available plus balances. This figure comes from adding column 3, the carryover balance available for appropriations, plus column 4, the total amount from all sources available for expenditures, to arrive at the total resources available. The completed form is submitted to the county auditor, and they will issue the first amended official certificate of estimated resources. The only purpose of this form is to provide the year-end fund balance adjustments and estimated revenue to the county auditor so they can take your official certificate and certify it as your first amended certificate. Let's take a look at the amended certificate. Here's the first page of a sample amended certificate. Its purpose is to certify more accurately the resources available than were on the official certificate, and it reauthorizes the maximum amount of appropriations by fund that your governing board may legislate. Note again, we're looking at page 1, and the funds are grouped by category and type on the first page. The funds are listed individually under their fund type on subsequent pages, and the total for each fund type is brought forward to page 1. This is the document you receive back from your county auditor or budget commission. The Ohio Revised Code authorizes them to make adjustments to your revenue estimates if they desire. So you must review it closely to see if the amount they have certified is what you requested. Compare the combined total of taxes and other sources columns to your estimated annual revenue by fund to ensure that they match. If they made changes, you must understand the reason for the difference and adjust your revenue estimates to match what they have certified. The fiscal officer will allocate each fund's estimated annual revenue to individual revenue accounts. This process will be covered later in Course 102. The final column, Total Resources Available for Appropriation, is the sum of the adjusted fund balance plus taxes and other sources. Now you understand the process to receive the first amended certificate. This is the first component of the operating budget. Remember, it only certifies the resources available for appropriation. It is not the board-adopted appropriations, and it does not authorize the expenditures. You also need to remember that the amended certificate does not actually put cash in your bank account. It's a component of the budget, and budget is not cash. You will not have access to this money immediately. You need to monitor the fund cash balance, receipts, and expenditures throughout the year. Spending must be regulated within the cash flow of each fund, and you will need to keep your governing board updated on the financial state of each fund so they can make informed decisions. The second component of the operating budget is appropriations. Appropriations are required to authorize the operations of a government entity. That means they need to be in place before a wage is earned or a service or supply is purchased. Let's explore this component further. Appropriations are the entity's annual spending plan, formally adopted by the governing board in the form of legislation. Appropriations also authorize the top level of spending. The maximum amount of appropriations by fund is limited to the total resources available on the official or the amended certificate of estimated resources, whichever is in effect at the time appropriations are adopted. There are 4 different types of appropriation actions the board may adopt. They're not interchangeable. Each title describes a different type of appropriations: temporary, permanent, supplemental, and reallocate. We're going to discuss each type in detail. Temporary appropriations authorize the operations of a government entity until permanent appropriations can be adopted. Temporary appropriations are generally adopted prior to year end to take effect January 1st. They expire automatically on March 31st or when permanent appropriations are adopted, whichever comes first. The amount by fund is limited by the official certificate, and the amount is only what you need to operate until permanents are adopted. Why do we need temporary appropriations? Well, Ohio Revised Code requires appropriations to be in place to authorize the operations of a government entity. That doesn't mean just at the meeting when the bills are paid. Appropriations are the authority to continue operations, not just pay bills. The government doesn't shut down on January 1st and wait for the amended certificate from the county auditor. The Budget Commission may not meet until later in January. Temporary appropriations authorize operations until the amended certificate is received, and then the governing board at the next meeting adopts the permanent appropriations. They're temporary because they fill that period of time when you're awaiting your first amended certificate but still need legislative authority to operate in the new year. Permanent appropriations are adopted after the receipt of the amended official certificate of estimated resources. Permanent appropriations must be adopted prior to April 1st because your temporary appropriations automatically expire by law on March 31st. Permanent appropriations apply to the entire year, including any period the temporary appropriations were in place. In other words, permanent appropriations do not supplement temporary appropriations. They completely replace temporary appropriations. Permanent appropriations are not reduced by the temporary amounts. Instead, the current temporary amounts are debited, and then the full permanent amounts are credited immediately after. Supplemental appropriations are adopted as needed and will either increase or decrease the current appropriations. Often when new money is certified on an amended certificate, supplemental appropriations are adopted to authorize additional spending. Supplemental appropriations are not required every time an amended certificate is issued. They're only adopted by the board if needed to authorize additional spending. If the board didn't appropriate 100% of the resources available in their permanent appropriations, they may adopt supplemental appropriation legislation up to 100% of the resources available at any time during the year. Reallocation of appropriation. Reallocation is the movement of current appropriations between appropriation accounts within a fund. Reallocation does not increase or decrease the total fund appropriation. Let's take a look at our sample. In the current unencumbered appropriation column for our 410 object account, it has $3,500 available, but the 420 account only has $25 available. If we don't need the full $3,500 from the 410 account, but we need more in the 420 account, we can reallocate all or part of the unencumbered balance between the accounts. See, in the reallocated amount column, I have taken away $1,500 from the 410 account and increased the 420 account by $1,500. The new unencumbered balance shows how the appropriations have been distributed and how much is now available in each account. Note the total column at the bottom. The current unencumbered appropriations and the new unencumbered appropriation balance are exactly the same. This has not changed the total appropriations. It's moved the authority to operate and spend from an account where it wasn't needed to an account where it is needed. This is a common occurrence. Reallocation outside the fiscal officer's legal level of control requires board legislation. Reallocation within the legal level of control does not require legislation. Refer to the Legal Level of Control section in Fund Accounting 103 for more information on this subject. Remember that appropriations do not actually put cash in your bank account. It is just a component of the budget used to plan and authorize operations and the top level of spending. You will not have access to this money immediately. You need to monitor fund cash balance, receipts, and expenditures throughout the year. Spending must be regulated within the cash flow of each fund. You will need to keep your governing board updated on the financial state of each fund so they can make informed decisions. Let's review what you've learned in Chapter 2. The current year operating budget has two separate components. Component 1 is the Certificate of Estimated Resources, either the official or the amended. These documents authorize the maximum amount the board may appropriate by fund. Component 2, Appropriations, are the board-adopted legislation that authorizes operations and spending. Neither component of the budget reflects a cash balance. This concludes Chapter 2 of UAN Governmental Fund Accounting.